Welcome back, everybody. If you're new, my name's Nicholas, and this is Investing Against the Grain. In today's episode, we got some nice topics to cover. First, we're going to go over Tesla record numbers. That's right, yet another record. This time is China deliveries, and most notably, we're going to talk about China domestic sales. So you're not going to want to miss that. We're going to unpack that, see what it means. And I get it. We have another video about another Tesla record, another Tesla breaking number that defeats the mold, defeats expectations. Well, guess what? This is going to come over and over, quarter after quarter, month after month. So get used to it. It should be fine as long as you're on the bullish side of Tesla. Now, we're also going to take a look at Tesla stock, ticker TSLA. Fundamentally, this channel is about investing. I happen to invest heavily into Tesla. I'm actually all in on Tesla. And so this channel tends to reflect what we're talking about, and that's my investment into Tesla. So we're going to take a look at the stock. We're going to look at the charts. We're going to unpack it, see what it means short-term, long-term, and I'll give a little more context behind the investing against the grain and what it means to me and why I actually named the channel that. And finally, I highly recommend you guys stick to the end. Why? Because we have some savage tweets to take a look at, and one of them is from Elon Musk to Jeff Bezos. So that should be a fun one. Do us a favor, hit the like button, hit the subscribe button, ring that bell, and let's get into it. We received Tesla Q3 deliveries a few days ago, or maybe about a week ago. However, recently, the actual China numbers were released. In other words, what China delivered as a whole for made in China vehicles at a Giga Shanghai, but also what China sold and delivered locally, in other words, domestically. I wanted to unpack those numbers a little bit and see what they look like and understand the greater context of how the Tesla business is looking within China. This is important because as we saw from the summer, say June, July time period, it had looked like China for Tesla was a weakening market. It looked like it was softening. And until recently, we haven't really had a fair chance to understand how that market is looking. And so now that this quarter is over, the first quarter where China was the export hub for Tesla, and the export factory tends to have only domestic vehicles being sold or delivered on the last month of the quarter. And so now that September has rounded out, and Shanghai has become, as of the beginning of Q3, the export manufacturing site for Tesla, now we can really understand what the China climate looks like and see what the market and the appetite is for Tesla within China domestically. So let's go ahead, take a look at the numbers, and unpack this a little bit. So here in red, we can see the numbers that were released. So domestically, we can see 153,000 domestic sales within China. They exported just under 4,000 vehicles, and they had a total of 56,000 made in China vehicles that were sold. Okay, these are sold. So not just produced, these were actually sold. These are record-breaking numbers, yet again. Let's start off just looking at made in China. So made in China is an aggregate of domestic sales plus exported. And so we can see here it's an aggregate to 56,000. If you look over the previous months, right, we just dwarfed the record. Last month was the record number for made in China at 44,000. Before that, the highest was 35. And after that, if we scroll up, you can see things were just ramping up at Shanghai. Okay, so this was yet another record-breaking quarter for Tesla, more importantly with made in China. However, the thesis had been that the only reason Tesla was doing so well with Shanghai is because they were exporting everything. Now, as we all know, there's narratives that can be drawn, and then there's facts. And the facts are that Tesla had decided at the beginning of Q3, or probably at the end of Q2, that Shanghai would make more sense to have that be the main factory, the main plant that would export vehicles to the rest of the world. And so at the beginning of Q3, that became the de facto Giga factory that would be the export hub. It would no longer be Fremont. This meant, one, lower costs of labor, more efficient process because Giga Shanghai is a more efficient plant. It also meant less ships needed to deliver vehicles. So for all those reasons, Shanghai became the de facto export hub. And as we can see here, 56,000 was the number. If we look at what they actually exported for September, it was only just under 4,000 vehicles. Why is this? Well, the way it works for an export hub is the first month and second month, they really focus on all of the outward bound vehicles and they try to get those out because those are the furthest points of distance to get a vehicle sold. And as the quarter winds down, mainly in that last month, that's when all of the actual domestic sales will happen. The same thing happened with Fremont, right? The California, North America market would be the last places that they would get deliveries. As a result, we can see here the trend. We can see June was the beginning of Q3, and we can see that the exports, or excuse me, July was the beginning. We can see the exports were 11,000, 31,000, then 3,000. However, we look at the sales within China, we saw 21,000, 12,000, and then 52,000 domestically. This is major. This is huge. This tells us that the market within China is strong for Tesla. All of this FUD and this narrative, although maybe it wasn't considered FUD, maybe there actually was some reason to have concern, especially with the protests and all the fake issues going on with Tesla in China. All of that has essentially been corrected. Legal action has been taken. People have been held accountable. And as we can see here, the result is that Tesla had a record-breaking month, record-breaking quarter. Let's really get this into perspective because 52,000 we can look at here and it's hard to understand it, but when we look at it from a percent perspective, it really starts to hit home. Let's just start off thinking about actual made in China and what that looked like. Month over month, so from August to September for made in China vehicles, Tesla went up 27%. That's month over month. That's the delta. That's a huge spread, all right? That you don't see that. Made in China year over year, this is a little skewed because it was a new factory opening up. So this was at 394%. Nonetheless, I want to have it in here just for context so we can track it moving forward. Now, quarter over quarter. This to me is a little more important because this shows how the factory itself is ramping up. So this is from Q2 to Q3, we saw a 71% increase. And again, the way these numbers are derived, at least for the quarter over quarter, was just aggregating July, August, September, and comparing it to April, May, and June. So that's for quarter over quarter, year over year, month over month. Those are self-explanatory. Those are just simply based on the month. Honestly, made in China and looking at those numbers, it's great and all, and it's good for ego padding, but what we really care about is, in order to understand the Chinese market itself for Tesla, we need to look at domestic sales, not just made in China, because made in China incorporates the exported vehicles as well. So let's change our lens and focus strictly on the made in China domestic sales. And let's see what those look like. So if I scroll down here, we can see a different picture. So domestic month over month looks like 305%. Now, again, I'll call it out. That is skewed because this is the export hub now. So we expected to see a bias towards September. So there is a bias there, and that has to be understood, and you have to put it in the right frame to have the right perspective. So although this 305% looks amazing and extremely impressive, understand that there is a heavy bias towards the end of that month. That may not be the best metric to look at. And consequentially, same with the year over year at 360%. This honestly isn't the best metric either, especially since it was a ramping up time period for Giga Shanghai. Model Y wasn't really getting out there. It was just very low volume. This will be more year over year like this will be more representative next year, right? That's when this metric will really matter. Okay, well, Nick, then why are you showing any of this? Well, because it's still important to understand where we're coming from, to understand where we're going. Now, the metric that really gives you insight into how powerful this quarter was is by looking at the domestic quarter over quarter. Now, keep in mind, if we come back up here, we can see that this was the previous quarter. This is Q2, April, May, and June, right? We had great numbers here, but this is also the same time period where all of the drama in China start to happen. And this is where people are saying, okay, Tesla has a China issue. They have weak sales. They have weak demand in China. As that was happening, the result of that weakness should have came in Q3. And so by looking here and seeing that domestically, again, domestic, not including exports, we saw a 41% increase quarter over quarter. If that doesn't signify strong growth, strong demand, I don't know what does. These numbers are remarkable. These numbers are record breaking, and you better believe these numbers are going to result in extreme profit, extreme revenue, and extreme margins for Tesla for the Q3 earnings happening next week. So remember, that's happening next week. They moved it up. So that's pretty exciting. It should happen next week on Wednesday. Those are the numbers. Hopefully that makes sense to you. If you have any questions about it, drop a comment down below and I'll do my best to get back to it. For those of you who don't know, I try to get to every comment. I do my best. There's a lot of them. So if you don't hear from me, just be patient. I'll eventually get to you. I do my best to get to everybody. Let's go ahead and transition from the China numbers and let's go ahead and talk about Tesla stock, TSLA, and let's look at the chart there and what that means. Hey everybody, this is a cut-in from the video right now. I noticed an error when I was editing this video and I want to make sure I got you guys the most accurate information that I can. So just want to take it on the chin and be transparent about the numbers. So this is what it should actually look like. So if we look over here at the chart, the actual numbers for domestic quarter over quarter should actually be 19%, not the 40% we had earlier. Either way, quarter over quarter for a time period where everyone thought that Tesla was weak when it came to domestic sales within China, that's fantastic. 20% quarter over quarter, right? This, like I said before, will resonate on the earnings call and we'll see it there. So that's the only thing I want to cover. I just want to touch on that real quick. These are the accurate numbers. Again, for some reason, my July China domestic sales was all screwed up. I had the May numbers in there. I don't even know how that happened, but just wanted to be transparent about that and fix it to make sure that you guys got the correct information. All right, let's get back into the video. Before we start discussing the actual stock of Tesla, let me go ahead and get this out there. I'm just an engineer. I'm not a financial analyst. I'm not here to give financial advice. This is just my thinking, my thoughts. So do with it what you will, but I highly recommend you make your own decisions. You think for yourself, because at the end of the day, that's what life's all about. It's thinking for yourself, but getting as much data that you can from the world and then synthesizing that down into something that makes sense for you. Now, with that said and that out of the way, let's take a look at TSLA within my Webull account. So here we are inside of my Webull account, and we're looking at ticker TSLA Tesla. Keep in mind, I only really use Webull just for the usability of their interactive chart here. I actually use a whole nother brokerage house for my actual investments, but I do really like the Webull interface, and it's just easy to use. This isn't a sponsor or anything. I don't get paid for anything, just my 2 cents. So anyways, let's go ahead and talk about what we're looking at here. Investing against the grain, fundamentally, the idea behind the name of my channel is twofold. One, to get away from this whole mentality of short trading, Robin Hood type mentality of investing. I truly believe that all you have to do is buy and hold for the long term. I'm of that school of thought. The Warren Buffett, the buy and hold, I truly believe that's the best approach. Why? Because nobody can time the market no matter what they say. However, I am the last one to tell you not to look at a stock every single day because I do. I have this up every single day on one of my monitors, on one of my screens, just keeping an eye on it. Why? Because it's fun. And you'd be a fool not to think it's fun to track your stocks and your investments. I know people want to say set it and forget it, but that's not fun. And I'm not about not having fun when you invest. I'm definitely about investing in companies that you are passionate about and you enjoy. Take that how you will, but I'm all about set and forget it, long-term hold, long-term gains, but I don't like short trading. I don't like short-term investments. And again, I encourage people to look at their stocks every day. Now, if it's going to cause you emotional grief or strife, seeing ups and downs, all right, don't do it. You have to make that decision for yourself. I'm not your therapist. You got to do it yourself. However, I do think it's fun. And if you enjoy the fun, go for it. Nothing's going to affect you, right? It's going to be okay. Now, the other part of investing against the grain is to go heavily into a position that you believe in. Currently, take myself for example, I have 100% of my investments in Tesla. The only investment, if you will, that I have outside of Tesla would be my house, what I'm sitting in right now. And personally, I don't consider a house an investment. That's a whole nother episode we can get into one of these days. When it comes to actual cash, liquid assets, everything I have is in Tesla. That, in my opinion, is investing against the grain because it goes against what everybody tells you as far as diversification, S&P 500 indexes. You have to have a wide variety portfolio. The Mad Money Jim Cramer ideology of, oh, you have to be in financial, oh, you have to be in tech, and you have to have a healthcare. No, BS. I call BS on that, mainly because of where I'm at today. The only reason I'm as successful as I am today is because I went all in on Apple. I went all in at Amazon, and now I've gone all in into Tesla. I'm not saying that everybody needs to do what I do, but that to me is investing against the grain, and that is why this channel is named as it is. All right, with all that said, let's actually take a look at the stock. Here's a one-day picture of the stock, and as you can tell, like just looking at it here, it actually looks like, if I were to guess, just looking at it, it'd be like, oh, it's kind of flat. But today we actually had a very big day. Today we had a breakout. We had a breakout out of 800. So we kept hitting 800, and we broke out against once. And here you can see we touched it again. And we were at this inflection point of whether or not the stock was going to break out upwards or downwards. And today was a big day because today we finally broke out to the positive side, and we hit a high of $812. You can see right there. We gave back a little bit towards the end of power hour. So 3 p.m. to 4 p.m. is considered power hour on East Coast time. We gave back a little bit, but we still closed above $800, which was highly bullish. Now, this is what makes it fun, looking at it from a day-to-day perspective, is being able to just watch this, see how it's going. Again, I think it's a lot of fun, but it's not what I like to do long-term. Long-term, I'm all about the long-term trend, because if you were to tell me, hey, I should buy here or I should sell here just to buy it down here, just to sell it again up here, to buy it back down here, to sell up here, give me a break. Nobody can predict this. You can get lucky maybe 50% of the time, but at that point, you're just flipping a coin. That's not worth the aggravation. So that's why I do not like short-term trading. I don't believe in swing trading. It's not my thing. It's not my passion. I like long-term wealth. So with that said, let's look at a longer-term perspective, and I think you'll understand why I'm very bullish on Tesla right now. If we go to a year to date, you can see this channel that Tesla is riding in. Okay, this channel starts all the way back, you could even say right here. So about May 11th is when this channel roughly starts. And Tesla has been riding this channel up higher and higher. And it's been touching the channel, touching it, and it's just staying right in here, right? And this right here, this is a 60-day moving average. So, or 30-day moving average, excuse me. And so it's also just riding on top of the 30 EMA. This, as long as it doesn't break out either to upside or downside of this channel, I think we can continue to watch this grind higher. And this is so beautiful because where you saw it last year, where it just ripped up higher, and I know everybody likes that, but when you rip up high like that, it's not as strong of a movement because you tend to rip up and rip down. We saw that here, right? Ripped up and ripped down. However, when you have a steady rise like this is extremely healthy, and this is sustainable for a longer period of time. As far as Tesla stock goes, we are in a up to the right. It's clear as day, and the longer it stays within this channel, the more powerful this movement is. The more bullish I get, the longer it's staying within this trajectory. Now, can it break out of this? Yes, of course. Are there catalysts moving forward that could do this? Yes, there really are, especially with Q3 next week. However, I don't anticipate it breaking out. I mentioned this with the Q3 deliveries number that came out, and I said that I don't think Tesla was actually going to make a move after that. Now, it did for maybe an hour. It went up to 800, and then it came right back down, and I think it actually closed negative the next day. But it wasn't until about 5 days later, which was exactly what I had said in my video, that we actually saw a change with the Tesla stock. It actually moved. It started to recognize the Q3 numbers. And I'm not a genius. This was just speculation on my point. I got lucky. That's all it meant. But it was a similar pattern that I saw with the Q2 numbers. If you recall the Q2 numbers for earnings, it was unreal. It demolished every single expectation that any analyst had by a wide margin, by 10, 15, 20%. It wasn't even close, right? Everything from revenue to margins to just everything. The whole business blew it out of the park. It was beyond the best quarter they've ever had. It was the first quarter they ever had a profitable quarter without any credits. So it was just a monumental quarter. And even with that, it still took about a week before we saw the stock actually react. And so that was my thesis behind why I thought after Q3 numbers that we would have about a week before we saw a reaction, and that played out. And I'd be very shocked if after Q3 earnings, we don't see a bit of a delay as well before we see the stock continue to grind on higher. And this is classic grinding higher, right? You can see this. I'll take this all day over a movement like this because I know this is sustainable and it's predictable. So this, again, is why I fundamentally really believe in long-term investing. I don't care about these quick little movements, the ups and downs, these gyrations. They don't make a difference for me. This, from investing here to up here to the future, right, to over $1,000, over $2,000, etc., that is where the real wealth will be built. It won't be built in the intraday trading in and out of a position. Just my opinion, just the way in this channel, investing against the grain, just the way we think. As far as Tesla stock goes, I'm highly bullish. I still think people are insane and they don't see what's coming. We are sitting at $812 a share. That sounds expensive to a lot of people, and I get that. I really do. But $812 a share, when we know what's coming up, it is incredibly cheap. It's a bargain. It's at a discount. I know everyone thinks I'm crazy, especially when you see this run up that we're looking at right here, but hear me out. Q3 numbers are coming out next week. And if I'm right, where it's going to be about another week delay before we actually see the stock move, that means there's about 2 weeks before we see another leg up within Tesla stock. You can get in now at 800, 812, right? Every opportunity I get, I'm buying more and more. So I'm not telling you something that I'm not doing myself. Now, on top of that, we have Giga Berlin and Giga Austin set to open, right? It's more or less confirmed now with Giga Berlin. They just got approval to go ahead and start testing up to 250 vehicle to test the production line and get things ironed out. So that is imminent. That's going to come. Either, end of October, November, they will be producing. And even Elon said, expect deliveries in December. So that will hit Q4. And Austin is likely to also be delivering in Q4. And keep in mind, Q4 is the largest quarter for Tesla. This is the quarter where they'll have the most sales, right? Fremont is ramping up still. Shanghai still ramping up. Add in Berlin, add in Austin, whatever they can produce in December and deliver. This is going to be a crazy quarter. So you have all these catalysts coming before anything happens, any real movement, right? We're sitting at 812, right? When we're sitting at $1,000, we're sitting at $1,200 a share. You're going to look back and say, hey, man, 800 was really a steal. That's, $200 or $400 to the upside. So this is what blows my mind. I don't understand how people even invest in companies like Ford or GM, which are just declining. I talked about this in my last video. These companies, everyone says the competition's coming. Is it? Again, I said this last time. Let's think about this. They're all talking about these new initiatives in batteries. They're in EVs, in manufacturing ways. They're talking about autonomous driving, right? They're talking about how they're going to go ahead and keep their ICE market up and profitable while they transition into EVs, and they're going to get to all these EVs by 2030 and all these things, yet they don't have the batteries and they don't have the mining ready for it, and the math doesn't add up. And just sit back and think about this. Let's say that they do go for everything they say. Ford, GM, Volkswagen, they do all these things. They go for all these initiatives. Those aren't easy tasks. To get into battery production, to get EVs right to where it can be profitable, to do autonomous driving, to fix your manufacturing, to not Osborne yourself with your ICE vehicle to your EV vehicles, to not do any of that and have all those initiatives, and you have to execute on every single one of those just to catch up to Tesla. Think about that. You have to execute on every single one of those perfectly to catch up to Tesla. If you fail on one of them, you don't catch Tesla. One. And with that same mindset, you have to hope Tesla just hits the pause button so you can catch up. This is what we're talking about. This isn't some Tesla fanboy. This isn't somebody who's blinded by some Elon Musk love or anything. This is reality. Okay, this is an engineer telling you how hard these things really are, right? This is very difficult to scale. It's very difficult to get a single product out there and ramp it up and have it work successfully. And they're trying to do this. They're not even launching products. They're trying to innovate on all these aspects while keeping their profit engine going of the ICE vehicle. Meanwhile, have you seen gas prices? I mean, this is a perfect recipe for Tesla. Again, $812 a share. This is a steal, in my opinion. All right, we're going to leave it there as far as the stock goes. Let's take a look at some of these savage tweets I was talking about. Rick Baumstein tweeted, pretty remarkable how all these Tesla stands, after pumping FSD as the company's differentiating factor for years, have suddenly decided it's not part of their valuation model after all. Coming over the top was James Stevenson saying, pretty remarkable how Rick Baumstein's valuation model told him in 2019 that Tesla would have at most one more profitable quarter. Let's take a look at this. So here we see the tweet thread from back in 2019, where Rick said, "Thanks for making my day, man." And James replied, "I take it from your reply, you predict Tesla will never have another profitable quarter." Rick's response, "Nope. I think they'll have one more manufactured profit when they throw in all their hoarded credits, etc. That will be followed almost immediately by a capital raise that will be significantly uglier than the last one." If we go back to the other tweet, we can see that James so boldly went ahead and reminded Rick how remarkable it was that he made this prediction back in 2019 about Tesla only having one more quarter of profitability. So I thought, I read this and I literally started tearing up with laughter. This was such a savage move by James. I've seen James do this a few times. His memory is very good. He doesn't forget these things, and he's constantly always reminding people of their flaws from a few years ago. And just a quick thing for Rick, it's not that people aren't valuing in FSD. It's more so that it seems we've all underestimated the margins and the growth and the power of the actual fleet. FSD is just yet another part of it. Now we have one more tweet to look at, and to me, this is the most savage tweet I've ever seen from Elon, in my opinion. Let me know your thoughts below in the comments, but let's take a look. Here we have Jeff Besos, as Elon likes to call him. "Listen and be open, but don't let anybody tell you who you are. This was just one of many stories telling us all the ways we were going to fail. Today, Amazon is one of the world's most successful companies and has revolutionized two entirely different industries." And they have, right? They absolutely have, between AWS and obviously Amazon that everybody knows from a retail perspective. They have completely revolutionized everything. And you can see here in the article, Amazon.bomb, the idea that Amazon CF Jeff Bezos was pioneered a new business, yada, 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 essentially talking about how he was crazy. Now, this is a great tweet, right? It's great to see Jeff, talk about this and bring this up, because I think it's always important to put the naysayers in their place. But, Jeff has recently been also poking this other bear over to the left called Elon Musk, and, kind of throwing lawsuit after lawsuit at him. And so I think it's only fitting that someone like Elon would go ahead and, throw a little shade over at Jeff Bezos, which, as we've all known, Jeff is a very wealthy man. He's the now second richest person in the world, and Elon Musk is now the first. And so I think in that same spirit, what we saw from Elon was this reply to his article, to his post on Twitter, and it's just a medal with the number 2 on it for second place. That's how I take it, at least. Whether it's net worth, with Elon being the wealthiest person in the world, whether it's SpaceX, just miles ahead of Blue Origin, whether it's, Jeff Bezos' investment in Rivian, to, arguably a Tesla competitor or a company trying to be like the next Tesla. Second place, I think, is very fitting. And again, maybe that's not what it meant. Maybe I'm reading too much into this. Let me know what you think. But this might be one of the funniest, if it means what I think it means, it might be one of the funniest retweets or replies to a tweet I've ever seen. And it is so savage that it is the 2 wealthiest men in the world, and they're playing games like this. It's, it really gives you hope that people can just take a joke, and that, we say kids forever, hopefully. I sometimes I still feel like I'm, no more than a 13-year-old kid inside. And we see James again. Breaking. Jeff Bezos has sued the second place emoji. We're going to leave it there for today. I hope you enjoyed this episode. Hopefully you got a little comic relief with this one. I appreciate everybody who stuck to the end. Heads up, I'm going to be traveling for work. I've got some meetings down in Miami. So I will be doing my episode for Friday. I'll be doing it on the road. So just keep an eye out for that. We'll see what we talk about for Friday. I don't want to tell too much, but it'll be a fun one. Should be interesting with the new setup being, traveling and everything. But all right, we're going to leave it there for today. I hope you enjoyed this episode. Hit the like button, hit the subscribe button, ring that bell. I love you all. Peace.